It's a sharp fall on Dalal Street led by small and mid caps. The sensex and the nifty end 1% lower, but the small cap index falls almost 4% and the mid cap index falls over 2.5%. PSU banks, realty, metals lead the slide.
Adani Group's Ambuja Cement is set to acquire 46.8% in Orient Cement from promoters and other stakeholders at an equity valuation of 8,100 crore rupees. The deal triggers an open offer for shareholders of Orient Cement and sparks speculation over more M&A in the sector.
Hyundai Motor India makes history by debuting on the Indian stock exchanges after the country's biggest IPO. But the stock lists at a discount to the offer price as analysts remain divided on its growth prospects. The global CEO is confident of growth and sees more capital investments in India.
Hello and welcome to Markets Forward, a crunching blow for the bulls where a lot of important levels have been disrupted today. We have plenty to go over, tell you all about the massive selling that we've seen, not just in large caps, but in the broader markets as well. I'm Surbhi Upadhyay, and with me on the show, as always, my colleague Nigel D'Souza. Nigel, what a day. I wasn't thinking so much when I wore the color, but unfortunately for the bulls, I guess this was the color of the day.
Well, today, if you just look at the chart all through the trading session, any kind of bounce got sold into. Yeah. And it was that sort of a day. Today is one of the weakest sessions actually I've seen in a very, very long time. Because we didn't get that fillip, even that 30, 40 point fillip, even towards the end of trade. The last tick as well, virtually at the low of the day. And if you just pull up a chart, you'll see that the Nifty breached the 100 DMA on a closing basis. So now we're trading below crucial technical levels as well. But you look at the Nifty and you'll say, Nigel, what are you talking about? We were down 1.3%. How bad is that? Well, you take a look at the breadth of the market. You had only one stock that was advancing for close to 10 stocks that were declining in trade. And the crisscross lines, well, they were far apart all through the trading session. And that's where the pain is. But to give you three big points in terms of why is the Nifty seeing correction? From the recent peak, we've seen a decent correction now. Earnings, well, they have missed estimates. We're getting more misses rather than more hits. And in the US markets, actually, the opposite is happening. That's why India is underperforming the globe. In the US markets, out of all the companies that have delivered numbers, 75% actually have beat estimates. Over here, the ratio is actually in favor of the number of misses. The rally as well, year to date or in the last 1 year, has been very, very swift. Headline index has moved up. The mid and the small caps have rallied 20-30% as well. So there is that temptation to book some profits. And particularly, some of them are getting a little bit nervous in this sort of a market. So there is selling on the screen. And finally, the biggest possibility is the FIIs. They're underweight. They're moving, to the lowest percentage of Indian holdings that we've seen in the last many, many years. It's now down to around 15 to around 16%. And in the month of October, they've sold $9 to $10 billion. And that's intense selling that we are seeing. So those are the top 3 points. But Surbhi, as you mentioned, the color was red on the screen. Yeah. And no bounces is what we saw. No real place to hide.
No, absolutely. And the nature of the fall was such that today, stocks across the board were falling 9-10%. Yeah. It's not just one stock falling 10% or 11%. We can start rattling the list and it would be running into, many, many names out there. There were some earnings disappointments as well, and we'll get to that as we go along. Stocks like SRF, for instance, reacting to negative earnings, or Supreme Industries, or Paytm for that matter. But it was more than results, really, a lot of the factors that Nigel alluded to. And the fact is that now there is a rush to book whatever profits are left, because the Nifty, let's remember, is down about 7% from the peak. The mid-cap index is down almost 8% from the peak. So the numbers are not looking very good if you've been holding on to a lot of those mid-cap names. So we'll talk about this as we go forward. Today, categorically speaking, the PSU space was singled out a little more than the rest of the market. Both the Nifty PSE index and the PSU Bank index, those indices were down between 3 and 4%. But they're not the only ones. The entire market was down and out, and that is what we will track as we go forward. So we'll bring in Hormaz, because he's been looking at a lot of the numbers and the data today and over the last couple of days in terms of the individual stock action. Then, of course, we focus on some individual names as well. Ambuja, as we told you in the headlines, because of the big deal. City Union Bank, very few specks of green on the screen today, and City Union Bank was one of them. We'll tell you why. Paytm came out with numbers, so it makes it to our buzzers list as well, as like I said, names like SRF and some other earnings reactions. And of course, we look out for some important cues from tomorrow's session, including the major earnings. But let's start first by dissecting what was really a complete sea of red. Hormaz, over to you.
Maybe our stylists preempted the color of the market by giving us our wardrobe for the day. But indeed, it was a sea of red across the benchmark indices or the broader markets. Earnings reactions were extreme yesterday. They were extreme today as well. And Supreme Industries could possibly be the accident of the day. 10% lower after the guidance cut that they did. Aditya Birla Real Estate as well, another 10% gone after the results. Jana Small Finance Bank, some asset quality concerns coming in there. And Kajaria Ceramics as well reacting to results. The result reactions are plenty, including Paytm and SRF that came out. But the one positive earnings reaction was City Union Bank. Amidst all the sea of red, City Union Bank stayed where it was, 12% higher at the end of the session. Positive commentary coming in as well. Analysts expecting the stock to touch levels of up to 200 rupees as well. You mentioned PSUs, they were under pressure. Shipbuilders were the ones leading the fall in today's session. Mazgaon Dock announced a stock split, announced a dividend, but still ended at the lowest point of the day, 11% lower. Cochin Shipyard has halved from its peak. Garden Reach, BHEL, HAL, all of them seeing severe losses in today's session as well. PNC Infratech continues to decline, another 7% gone in today's session after the 20% fall seen yesterday, and the stock has lost almost 3,000 crore in market cap over the last two sessions. High beta sectors like real estate as well selling off in today's session. Almost all real estate index constituents seeing losses of anywhere between 4 to 6% in today's session. And lastly, stocks seeing movement on the back of volumes, and they were predominantly to the downside in today's session. And look at these Jupiter Wagons, Amber Enterprises numbers have just come in, L&T Finance, Jindal Stainless, all of them 7 to 12% fall on very, very strong volumes. Back to you guys.
All right, thanks for a lot for that, Hormuz. Well, let's get in our guests. We have Jai Bala of CashTheChaos.com and Gurmeet, Chadha, Managing Partner and CIO of Complete Circle. Hi, gentlemen. Thanks a lot for joining in. Well, Jai, you have been cautious on the markets. You'll be feeling good. But if you're short on the index, what do? What are the targets? And at some point of time, will you be looking to cover those short calls that you have taken or those puts that you have bought?
Yeah, already I'm lightening. I mean, I'm advocating lightening the put that you've taken from the beginning of October. And although the supports coming at about 23,890 to 800, we don't know the extreme short term what the markets are going to do. This kind of extreme negative breadth usually brings about a very short term bounce. But in my opinion, the markets aren't done with the decline, and the next bounce is probably going to bring in a larger decline. In fact, the Nifty was supposed to bounce back to about 25,500. It broke the October 7th low of about 25,567 and change, and it's come below that. And while the banking index is behaving as expected, it's also looking quite weak. And the most important takeaway of today is the deterioration of the breadth. We have head and shoulders breakdown on the Nifty mid cap, Nifty next 50, and Nifty small cap, and so many other indices. So this is not going away, and it's not going away easily.
Okay, all right, got that, Jai. Well, Gurmeet, I wanted your view on the big cement deal that was announced. But let's run our viewers through the contours of the deal. The big deal today was Ambuja Cement went ahead and bought 47% stake in Orient Cement. Most of the stake was sold by the promoter entity, which have 37% stake in the company. Because of the large transaction, it triggers an open offer, 26% stake. What about the valuations? 8,100 crores is the equity valuation for a total capacity of around 8.5 million tons, which means on an EV per ton basis, it's around $113, $114 on a per ton basis. Orient Cement, remember, is debt-free, and Ambuja Cement says that they'll fund this transaction via internal accruals. What else does Ambuja get? Market share goes up by 2%. They'll get the 8.5 million ton operational capacity. They can add another 8.1. And they said since they have limestone, they can look to add another 6 million tons in North India. How does Ambuja Cement's trajectory move in terms of the capacity addition? When they took over the company, it was 68 million tons. Now, post these transactions, Sanghi, Penna, as well as Orient, they'll move to around 97.5 million tons and puts them on course to head towards the 100 million tons by the end of this year. They've laid out a guidance. They want to take the EBITDA per ton to around 1,500 rupees and the ROC to around 15%. It's a win-win-win situation. Ambuja gets the capacity they're looking for. Orient gets a better promoter. And for the industry, consolidation is good news because in the longer term, that's what bodes well. Gurmeet, what do you make of this deal and how are you all approaching the cement space?
As you said, Nigel, seems to be a win-win. Valuations are roughly now hovering between $100 to $115 a ton. But I think till the time this consolidation takes in, I think the volume numbers have been a touch soft. While Ultratech, for example, in second half is now guiding for better revenue, but that's also more price led. So consolidation eventually will lead to better pricing too. But it seems to be a good acquisition, and I think we are probably moving towards two large players, one with probably 200 million tons, and other probably targeting 120, 130 million tons over the next 3, 4 years. We are positioned in the way we have Ultratech and Ambuja, in some portfolios. We are also trying to see if there is any special situation in terms of more acquisition targets, especially down south. So we have small exposure to Saga Cement. Valuations is very, very, it's almost at $40, $45 a ton. They acquired AP. AP was a great acquisition for the price they got. I think with some stability, and some maybe hoping some better quarterly numbers. I think that should also be for grabs. A lot of large players have also taken stake there, and it seems to be at $40 a very, very good acquisition candidate. We'll see how it goes.
Okay, that was indeed the big deal of the day. Let's move on now to some very sharp earnings reactions that came in, starting with Supreme Industries. This stock collapsed about 10% in trade after coming out with weak numbers and guiding for sort of a more subdued performance even going forward. There is a guidance cut that the company has gone ahead with. Upasana has more details here. Upasana?
Well, Supreme Industries reported a weak set of numbers, missed the street estimates on all counters. Revenue stood at 2,273 crores with a downtick of 2% on a YoY basis. EBITDA margins are also under pressure, down about 140 basis points at 14%. And PAT stood at 219 crores with a downtick of about 16% on a YoY basis. Now, it is important to note that company has cut its volume growth guidance in plastic pipe system segment to 16 to 18% versus 25% guided earlier for FY25. It says that the plastic pipe system business growth was severely affected due to extreme volatility seen in PVC resin prices. This segment also saw huge inventory destocking, and there was also a surge in freight rates impacting the overall export volumes. As of now, export stands less than 3% of the company's overall sales mix. Now, going forward for FY25, company is given an overall growth guidance of 14 to 18%, and it is expecting margins to range between 14.5 to 15%. So all in all, weak set of numbers coming in from Supreme Industries in its Q2 FY25.
Well, thanks very much for that, Upasana. But Supreme wasn't the only stock that disappointed. There's a long list in terms of earnings misses as well. But let's look at some numbers from the BFSI space. And the one green tick, like I said, that we had in the market today was City Union Bank. The stock was bid up because it managed to showcase pretty decent asset quality in an otherwise concerning environment. We have Abhishek joining in to tell us more about this one, and also Paytm. With Paytm, we're going back to the red color because Paytm was down after coming out with its Q2 performance. So Abhishek, let's go step by step, starting with City Union.
Well, City Union Bank showed two key trends which were on the opposite side to the industry. One, the industry is seeing a declining net interest margin while they saw improvement in their net interest margin. And the other point that slippages are rising for many lenders, but for City Union Bank it has declined, and that was rewarded by the investors in trade today. So the net interest margin has come in at 5-quarter high of 3.67% versus 3.54% on a sequential basis. The NII growth was about 6.8% quarter on quarter, and that led to profit growth of 7.8% on a sequential basis. The annualized slippage ratio declined quarter on quarter to 1.47% versus 1.53% in the previous quarter, and the asset quality also saw improvement with gross NPA ratio coming down to 3.5% versus 3.9% in the previous quarter. Macquarie has written on City Union Bank they have an outperformance rating with a target price of 185 per share. They say that the growth engines are back in City Union Bank. They expect ROA to remain at around 1.5 to 1.6% level despite higher credit costs that they anticipate for the bank going forward. So risk reward looks favorable right now given the potential ROA trajectory as well as the growth potential that the bank is showing. With reference to Paytm, there was one-off income that aided in terms of profitability. However, employee expenses are down very sharply. So total income grew by 12% sequentially. EBITDA loss narrowed down to 186 crore versus 655 crore in the previous quarter. Employee expenses were down 30.3% YOY and about 12.5 to 13% on a sequential basis. So exceptional gain of about 1,345 crore has come in Q2 FY25 for them. They reported a net profit based on this exceptional gain of about 930 crore versus the loss that they had of about 840 crore in the previous quarter. So X of one-off gains that they had in this quarter, their losses would have narrowed down to a little more than 400 crore when compared to 840 crore in the previous quarter. Gross merchandise value, that's improved by about 4% on a sequential basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, SRF reported another weak set of numbers in the second quarter. The earnings were well below expectations. Net profit was down 33%, came in at around 200 crore, which was lower than the CNBC TV18 poll of around 290 crores. The margins, that was a disappointment, came in at around 15.7%, which compares to around 19.7%, or that's a 400 basis points decline. Revenues were up 7%. But the EBITDA declined by close to around 13.4%, coming in at around 538 crores. However, the management sounded positive on the second half of the year's numbers. While the performance this quarter has expectedly been subdued, the company believes the worst is over and the worst is behind. They expect to start seeing an improvement from the next quarter onwards with the likelihood of a strong finish to the year. Overall, the order book remains strong is what they say for the chemical sector, and a better performance is what they're anticipating.
Okay, all right. So long list of earnings there. We'll have to thank both our guests for the quick take today. I unfortunately can't go into too much of detail because of the earnings. Thank you very much, Gurmeet, as well as Jai, for joining in. We have to slip into a very quick break, come back on the other side with the top corporate voices of the day and the events to watch tomorrow. Welcome back. You're with us in Markets Forward. Let's look at Zomato. Now, the company has reported a nearly five-fold increase in profits in the second quarter to about 176 crore rupees. The food aggregator has reported a 68% increase in revenue to nearly 4,800 crores. From reporting an EBITDA loss of 47 crore rupees last year, Zomato has now swung into a positive EBITDA number of 226 crore rupees. So the positive performance continues, but the other big announcement obviously is the fundraise, and this is a CNBC TV18 news break getting confirmed. The company's board has indeed approved a fundraise worth about 8,500 crore rupees, and Nimesh alerted us on this possibility earlier. The stories come through now. Nimesh, congratulations on that, and what additional details are you picking up?
Well, again, the news break is confirmed. The board has approved, Zomato's board has approved $1 billion fundraising via QIP, so which is around 8,500 crores. I understand now that the results are out, it's an impressive results. Maybe, in the next few days or maybe the QIP will get launched. Again, the most important aspect of this fundraising is that while the street was a bit surprised at why they're raising money because they're already sitting on cash, the most important trigger for the fundraising is they wanted to bring down the FDI holding to below 50%. I understand this QIP will be largely, fundraising which will happen to domestic investors, by virtue of which the domestic holding will go above 51, and the FDI and plus FI holding will fall below 50%. Once the fundraising is done, I understand the board, the Zomato board is likely to write to RBI requesting the cap of FDI at 49%. This is going to be very important for Blinkit, because Blinkit falls under the FDI regulation. So once the FI holding is below 51 or below 49 or less than 50, you will see a bit of relaxation in terms of FDI regulations for Blinkit. That's been the key reason that the board today has approved a fundraising of $1 billion. And I understand from sources that largely the fund will be raised to domestic investors, so that the combined FI FDI holding finally falls below 50%.
All right, thanks a lot for that, Nimesh, and congratulations on that big news break. Moving on to India's largest public offering. From Hyundai Motor India, they made a tepid debut on the bourses today. The stock listed at a discount of 1.5% to its issue price. The stock, though, continued to slide, ending the day over 1% in the red. Brokerage firms including Nomura and Macquarie, they are bullish on the stock. They have issued buy calls on the stock. However, MK initiated coverage on the stock but believes that the stock may fall 11% from its IPO price earlier today. We did also speak to the top management from Hyundai, the global CEO, who is confident of growth and sees more capital investments in India. The company also has many EV launches in the pipeline. Let's hear them out.
We believe with the addition of capacity, which is almost, if you see, 30% capacity addition is happening for HMI in the next 3 years. And this is after a gap of more than 10 years. So I think this is a big moment for the growth of HMI going forward. And we believe that, yes, not only in terms of volume, but the strategy of premiumization, the strategy of adding features, and then, meeting the expectation of the customers will help us to really sustain the volume as well as profitability. We believe that we are in a position to really, grow in line with the market in terms of volume, and of course, always in terms of average selling price to continuously go up.
So if you see, okay, let's see, the market penetration is about 2%, yeah. But we are starting and we are putting the more EVs now. And up to year 2030, we are expecting about 5 EV models running in this market. We are expecting about 10%.
All right, that was Hyundai India making its debut on the street. Let's take a note of the top corporate voices we picked up during the course of the day. First up, CG Power. The management has told us that the margin dip seen in the second quarter was a one-off, but the margins can actually go back to 15% levels over the next 1 to 2 quarters. On the QIP and the fundraise, the MD says that 1,300 crore rupees will be used for acquisitions, while about 1,500 crores will go towards capex in the existing business lines. He adds that earnings can compound at 30% over the next 3 to 5 years.
We also spoke to Gravita. Well, they in fact said, they spoke to CNBC TV 18, the lead volumes growth disappointed in the second quarter. The company's CEO, Mr. Yogesh Malhotra, expects 25% volume growth in the next few years as regulatory tailwinds play out. He also adds that margins will hover around these levels but will improve as the revenue mix changes. He also guides for ROCE at around 20% and working capital days coming in closer to around 65 to around 70 days.
And before we go, let's tell you about all the key events and the earnings to watch tomorrow. Abhishek has the details. Abhishek.
Well, to begin with, economic data will be out for Singapore CPI tomorrow. So that is estimated at minus 1.1% versus plus 0.09% that it came out last time around. Euro data with Euro area consumer confidence, that index will come out with the numbers estimated at minus 12.5 versus minus 12.9% that it came around last time. US home sales data, September number will come out estimated at about 3.9 million units versus 3.86 million units that it came last time. So with reference to India, minutes of RBI monetary policy meeting will be given out tomorrow evening. Watch out for that. And in terms of the results, watch out for AU Small Finance Bank, Bajaj Finserv, Hindustan Unilever, as well as SBI Life, TVS Motors and United Spirits. All of them will be coming out with their Q2 FY25 performance tomorrow. Back to you.
All right, thanks a lot for that, Abhishek. Well, on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back, though, with more news and updates on the other side.